Welcome pair traders to this short video where we're going to take you through the trade of the month for June 2020, and that's on a pair that's in our top 30 US equities pairs, KBR and TTEK. So what signal did we get? We got it on the 16th of June, which was to enter a trade where you sell short KBR and buy long TTEK, TTEK, and the prices and volumes are here in the trade signal. So who are these companies and why did we pair them to begin with? Well, let's look at KBR. KBR is traded on the New York Stock Exchange, 22.91 at the last close. Market cap of 3.3 billion, a beta of about 1.25, 1.26. And that is paired with TTEK, which is traded on NASDAQ, 78.43 the last close. Market cap of 4.2 billion and a beta of about 0.9. Let's go quickly through the profiles of these two companies, so you can see why we believe they're very fundamentally similar. Well, first off, they're both in the industrial sector and engineering construction industry subsector. KBR has 37,000 employees based out of Houston, and it provides professional services and technologies for government and mainly hydrocarbons, energy solutions. And what they do, all of the environmental impact assessments, all of the planning and construction management and specialized engineering for massive projects. So for building oil refineries, pipelines, exploration work, and defense for the US government. So we paired that with TTEK, which is a very similar company, again, same industry subsector, 20,000 employees, based out of Los Angeles. And Tetra Tech, they provide consulting and engineering services worldwide to government, mainly defense, and also the energy segments. A lot of it is very similar to KBR's work. So natural resources, energy, and utilities markets doing the same thing, which is all of the project stages to get major civil works done in those industries. So those are the two companies and why we paired them. The next thing we need to look at when we decide whether or not to take a signal was that they called the signal, well, the signal was called on the 16th of June. So what about how that compares to earnings dates and dividend dates? Well, the earnings dates is going to be sometime around July 28th. Okay, this signal was called on June 16th, so the previous earnings release would have been about April, mid-April. So we're fine on that, and then there's more than enough time between when the signal was called and when the next earnings date would be on KBR. So let's take a look at Tetra Tech. Again, we'll see the same thing here. Earnings dates are expected about the same period of time, which means we are clear. This went ex-dividend on May 11th, so as of June 16th, we're fine. And on KBR, ex-dividend on June 11th, and the signal was called on June 16th. So again, we're fine there. So it's clear on earnings and clear on dividends for the timing of the signal. And the next thing you would do is determine whether or not there was a news event around that time that would have caused the signal. And so the only thing for KBR that's proximate is this news that they won a $570 million NASA contract. It's a big win for them, but it's a very small in the overall schema of their business. They have quite a high revenue, and 570 million is a decent little project, but it's not enough to hugely shift the needle. Tetra Tech, what we can look at here is press releases. And again, nothing. The only press release in all of June was Tetra Tech provides third quarter and fiscal guidance. Now that's very important because given the pandemic and all the effects in Q2 of that, the guidance is really important. However, this came out on the 9th of June, and if we look at the trade signal, it's on the 16th of June. So the market has had 4 or 5 days to digest that, and so it's unlikely that that guidance, 4 or 5 trading days previous, would have led to this signal. So on the basis of the news, it looks like it's a clean liquidity-driven signal. We're clear for dividends. We're clear for earnings dates. So on those factors, it's a clean signal. Just before we do go into the further analysis of the pair charts, let's just take a look at the backtest and why we chose this in the first place. So here's the backtest that led us to choose this pair back in April for the top 30. And we can see that over the last 3 years there were 9 trades. The average correlation was 65%. It was co-integrated. Our reading is 0.90. It delivered about 19% compound annual growth rate unlevered on that pair, okay, for on a yearly basis for those 9 trades. So that's if you had your capital in nothing else, 18%. The max drawdown was about the same, 20.5%. Gross profit over 7,000, average net profit of trade of 743.49, and most importantly, 100% winning trades. You can see the equity curve here, bottom left to top right. Lots of trades came good very quickly, and 100% of them were winners. You see the ratio chart on the bottom right. You have a flat ratio, more or less, over the 3-year period with lots of zero crossings back and forth, back and forth, back and forth, which is what we really like to see. A little bit of trendiness in the last few months, but otherwise a great pair over the whole period. So just before we would jump into the pair charts analysis, we also like to look at the share price graphs. And what we can see here is in the last sort of 5 months, we had the big crash, a recovery, and a ranging, started trying to recover, but also started ranging again. So crash, ranging, recovery, ranging. And if we look at TTEK, pretty much the same thing. Crash, recovery, falls again, tries to recover, falls again. So it's all ranging here. And so we have a very similar set of price actions on the 2 shares, which confirms that the likeliness that these are going to revert to mean is pretty good. The other chart we always look at is, this is over the last year, the relative performance of the 2 shares. And you can see that every time they diverge, so when the green line was lagging the blue line, they reconverge. Then they diverged, but eventually reconverged. Then they tracked each other very closely. Then green diverged hugely in the crash, but then later reconverged. Again diverged, reconverged. And so this trade signal is up in here. And what we see from that is that the co-integration is very much in play. And that would also lead us to be comfortable that this is a good pair to trade. So let's go to the signal itself and see whether we would have taken this. Now what I want to highlight here, which may frustrate some of you, is this signal was called intraday and at 2.74 standard deviations. So here, now what you're seeing on these charts is end of day, okay? And for those of you who don't trade intraday on PTF, you probably wouldn't have got the signal because our entries for this top 30 set are at 2.7 standard deviations, or minus 2.7. And in this case, intraday it went to 2.74 and called the trade. So had you had your PTF open during the day and you do take intraday signals, you would have got this signal. And here's the signal. What we can see is that the ratio over the last year, it's pretty much at its high, up against resistance. So that looks like a good time to be taking it. If we look at the plus minus, again, it was 2.74, so well into range of where you would take these, usually somewhere between 2.5 and 3. And if we look at the RSI when that signal happened, what we can see is that RSI maxed out shortly before the signal, well up into the high 80s, and by the time the signal was calling, was falling rapidly. And that's while the ratio is rising. So the ratio is rising rapidly, yet the RSI is falling rapidly. That can be looked at as divergence. And, excuse me on that. And so that divergence is something we look for in our trade signals. And when you have it, it can tend to increase the probability of a reversion to mean. So we would like that. And so that looks good. If we look at the correlation, when this was called, it was well up into the 70s and reasonably stable. It's not in one of these massive correlation breakdowns. And over the last sort of, I don't know, I guess that's about 4 months, it's been quite stable. So that looks good as well. On that basis, you would have taken the trade and you would have been in the trade for 1, 2, 3, 4, 5 days. So the trade closed on the 22nd. So you entered on the 16th, closed on the 22nd. You had shorted KBR at 26.96. You bought it back for 24.18. You'd gone long TTEK, Tetra Tech at 75.53. You bought it back at 77.54. And the standard deviations was 0.93 positive. So this had tightened back into here. Okay. Sorry, you see it right there. And the profit, this trade went into profit on the very first day, and it closed out with 1,257.52 of profit after slippage and commissions. So a very positive trade on a $10,000 leg. That's 12.6% unlevered, and if you'd levered this 5 to 1 using CFDs, you would have had to put up 4,000 of margin, and so that is over a 30% return on margin in 5 market days. So a fantastic trade, exactly what we like to see. We hope you're in it. We hope you bank some profits on this, and we look forward to bringing you many more of the same. Happy trading, everyone.